All right, good morning. Welcome back here to Trader Winning. Great to have you aboard. Here we go. Market busting up into some new highs here this morning. And, on that chase, you can see the consolidation that's been here this week as the market has pretty much just gone nowhere this week. But breaking on out here this morning above the 2,900 level and doing so on some positive news. Now, what's interesting is, yes, it's positive news, but it's very indicative of, what we've been talking about, this kind of Teflon-coated market where, bad news just doesn't stick. It just slides right on off, and we see that happening again here today. And a little bit of good news is lauded, cheered, bought up aggressively, and we're seeing that here today. The headlines are all about JP Morgan earnings, Wells Fargo earnings being kicked off here this morning. But if we look at when the move happened here on S&P futures, you can see the initial move, and before JP Morgan earnings, the market it was already up. It was already up about 15 points. Right, the move came here during the European session, and it started right at a very specific time, and there was a very specific catalyst here for it. The catalyst is economic data out of China. Now, you say, okay, well, economic data out of China, are we talking manufacturing? Are we talking, are we talking retail sales? What are we talking about here? Well, we're talking about exports. We're talking about exports here in China, and they're basically merchandise trade balance number. And if we look at this number and, kind of look at what it's showing, exports, right? Exports were revised down a little bit for last month, down 20%. They were expected to rise 8.4% this month, but they rose to 14.2% year-over-year increase in exports. Pretty big number. Pretty solid number. And you say, okay, well, that's nice, right? Good news, right? More exports, especially to Europe, which was, something that was a concern. But exports over to Europe. But then take a look at imports. Imports fell pretty big. Exporting more, importing less. That's what the trade war is about, right? Exporting more, importing less. We see that. We see that. Imports being talked about, imports being looked at, imports being addressed or worried about. Not at all. It's all about exports, right? All about exports. This is the positive number. The negative number is being ignored. The positive number is being cheered. That's where we see the reaction, and that's the type of market we are in and continue to be in. And it's not a surprise. In fact, I was awake during the time, and I was watching it, and watching a few things over in Europe, and I looked at the number. I just kind of chuckled to myself because it was, this is just what we have seen continue here with the market, and it's just one where continues to be Teflon coated here overall. Then we have JP Morgan earnings, right? JP Morgan earnings come out. We see the market rally a little bit more on that, and JP Morgan stock jumps, and it has every reason to. Absolutely every reason to. This is a good report here from JP Morgan. We talked about going into this earnings season. What's going to matter? It's going to matter revenue. Right? This is the earnings beat here by JP Morgan, right? Which you look at the earnings miss last quarter, you combine it with the beat this quarter. Oh, okay, you know what? It's pretty even keeled, right? There's a little accounting that is taking place here, right? And you come in though to the revenue, which earnings can be manipulated, revenue cannot be manipulated to near the same degree. You look at the revenue. That is a monster beat. That is a monster beat here from J.P. Morgan. It comes off of the heels of last month Jamie Dimon talking about some of the big global risks that are out there and everything else, and now today he's saying, hey, the global risks, they're still out there, but we're humming. And what's really interesting about this report is this isn't being driven. This move higher in revenue is not being driven by trading. In fact, trading and markets, that segment is down 6% year over year. That segment actually fell. This is being driven by consumer, by investment banking, by the more economically sensitive areas. In fact, driven by the areas that Bank of America has very good footholds in, right? And so it's driven by an area where where Bank of America really has a foothold, where Goldman Sachs really doesn't. So very interesting to kind of see the dynamic here. But you could make an argument very easily that J.P. Morgan's earnings are better for Bank of America than for J.P. Morgan, right? You could make that argument here. But just a really, really good quarter, really solid quarter here. We have, we still have, some of the conference call and all of that going on, right? So it's still fluid, still happening here. We're still going to hear, more information with this, but overall, the numbers on the surface here, they look fantastic. I mean, they absolutely look fantastic, and they look pretty invulnerable to to the Fed, and that is a huge kind of what's the right word here? That's a huge feat for J.P. Morgan. Now, Wells Fargo also reported earnings here this morning. You'll notice the stock, pretty much flat here after the earnings, after the initial pop up. It is trading on flat right now. But if you look at Wells Fargo and you look at the revenue picture here for it, they beat on earnings. They beat on earnings pretty solidly. But revenue, big beat on revenue, right? If you're bearish and you're looking at the revenues here this morning from Wells Fargo and J.P. Morgan, you're going, whoa, okay, I may have to reassess some things, right? That's exactly what it is. That's exactly what it is. Now, we haven't heard a lot of revenue guidance for the future yet, so it's still not all in. But, this is a very bullish start to earnings season from these two banks and, these two revenue giants. Now, you combine that with Investor Day here from Disney, creating a big pop in the stock. This is one where you don't hear me talk about Disney all too much. You know that I have a long-term, long position here with Disney. It's a stock where, we've talked about for years. It's going to 120. It's going to break 120. This is a company that just has everything going on right here for it. And, it consolidated for years, with ESPN and all of that. But they have made some acquisitions. They have, bought a lot of different assets that are going to start piling gains into the company. And we talked about how, investors, in fact, on our earnings preview, we showed how, the revenue for Disney here in the future is going to be jumping, right? And yes, the market knows that's coming. The market understands it's coming because of the new assets. But has it really priced that in? It's overall, no, it hasn't, right? It still has Disney priced as, at what it had before. And so, Disney going to make a pretty monster jump here this morning after their Investor Day, stuff and just pretty good move here for them. I haven't gone through all the info and everything else here for it. I've just kind of looked at the headlines. I haven't done anything else, but they have been upgraded by, I believe it was JP Morgan upgraded them here this morning, put a $137 price target, I believe. UBS, I think they kept about a 128 price target here for it. But, it's one where uh, the only concern I have with it is Bob Iger is stepping down. He is going to step down at the end of 2021, so he says. Now, we have seen, this change from time to time, but I've always said when Bob Iger steps down, I'll end my long-term long position. And, his decision to keep at Disney, to stay at Disney, to me has been a sign that things are going very, very well. And, yeah, he's probably not leaving because they're going poorly, right? In fact, he's not. But, it's one of those where I think the majority of the games will be in by the time he steps away. So anyway, that's Disney here this morning. So market waking up to a pretty sizable gap. You'll notice oil recovering all of its losses here from yesterday. Yesterday oil was trading down on south. This morning popping back one up here. And what's driving the move in oil? Well, oil started to move at the same time as S&P futures, right? And same time we got the export data out of China. So that's there's a high correlation in the price action there, with oil and with the S&P futures that we see. And we talked about it yesterday. We saw oil down, but we didn't see energy stocks down. And generally when we see that, that's a sign that, hey, there's going to be a little more upside. In fact, a very interesting gap up in Halliburton here this morning. I'm very interested to see if the algorithm triggers a bullish signal on some of the energy stocks in the watch list. Halliburton, Schlumberger, Conoco, Chevron, because yesterday I thought, there was a chance it would trigger bearish, and they didn't. They failed to trigger bearish, and I would not be surprised if we saw a little upside whipsaw here, or with this kind of upside change that we see some sort of bullish signal come in. But we'll see. We'll see about an hour after the market opens. I'll jump on. We'll take a look at Nike, see if we have to do anything with that, and then take a look at any of the triggers that are coming in here this morning, and look to run here with those. I'll also be very curious to see if we see a market vibe change here today. If we see the internals actually move to a significant degree, there's a chance that we could see that given the small cap outperformance, given some of the sectoral movements that we have seen here of late. They've been a little more positive of late than they have been, which is something that is changing in the favor of the bulls. Here as we go along. Okay. All right. So anyway, that's some of the pre-market here, some of the stuff going on out there in the market this morning. And, market's going to have a very interesting day. I expect there will be a few swings here in the market today. I think this is the kind of day where if the market's not able to hold its gains, you get very, very, very bearish. But that's a big if. And the probability is very slim that the market doesn't hold its gains here today. So, I can make that statement, say if, but that's a big if. That's not something that you look and you go, well, that's a high probability bet. But if it does happen, there's a long way to fall. There's a long way to fall. Thanks for hopping on. Have yourselves a great one. We'll talk to you about an hour after the market opens. Take care.